Our alpha manager today is Vinay Jaising, Managing Director, Portfolio Management Services at JM Financial Services. Vinay, good to have you with us here. Thank you very much for your time. What themes, Vinay, are you betting on now with the market correction sort of in a way firmly entrenched? You know, we've got to a point where we've started talking about how broader markets have corrected a fair bit. 25% of Nifty 500 companies have lost over 20% from the beginning of the year, etc., etc. Is it time to start to look for opportunities, and where?
So absolutely. The Indian markets have corrected by almost 9% this year when the rest of the world is up 3%. So the change which India has got derated has been a lot more, very similar to what India had on the opposite side last year, wherein India really did well. So I think it's time to start nibbling into the equity markets for sure, especially second half of the year when you see the last rate hikes behind us and probably rates coming down. You want to be well entrenched into the Indian part of the market. So where do we put money? I think three themes we are looking at. First, interest rates will remain high for a longer period of time. So here we like banks. We like both private sector banks and public sector banks. We're excited about the loan book growth, which is a high 15% today, largely coming in from retail. But once the capex part of the story comes up, firstly from the government, but later on from the corporates, you'll start seeing a lot of corporate loan book growth activation as well, which may be probably later part of next year. So banks is where we are very excited about. The second part where we're excited about is the capex part of the story. We've heard a lot about what the government suggested of increasing the capex spend as a percentage of GDP from 4.1 to 4.9. So here, again, I think we've got a lot of baskets coming in the capex story, cement names, some manufacturing names, defense names coming into the play. And the third, the dollar, the DXY has corrected from 115 to 102, but the rupee is still resilient at 82. It's neither moving up nor moving down largely this year. And seeing what US is doing, we will not be surprised if the rupee goes probably to 84, 85 levels. So Make in India story playing a little bit of companies, which are getting net revenues for the country would be the third theme for us. So three themes which we are going to be looking into.
Vinay, afternoon. I remember our last conversation where you delved a little deeper into these individual themes and specialty chemicals. You spoke about how you like Archean Chemicals, Tattva Chintan, Devyani International in the domestic inflation theme is something that you like. Any new themes that you're dabbling under this broad structure that you've outlined?
Sure. So in the capex angle, I think now we need to look at, what can the cement companies give? At one end, you've seen the coal prices coming down. At the second end, you're also seeing a possible price hike coming in. So there we like companies like at one end, Orient Cement in small cap, mid cap, and companies like Ultratech Cement. So that's one part of the capex angle we like. Also, we really like companies like Hindustan Aeronautics, courtesy, the Make in India story coming in. And MTAR, again, because of the way it's keeping on increasing its order book coming in from Bloom globally. So, these are two companies which we really like as far as a theme of Make in India is concerned.
Okay, stay on, Vinay. Just give us a moment. The market's making a move back to the highs of the day. That's the extent of volatility. We've had three instances where the market sold off from the top, and then there's buying also at the lower levels. So it is a great tussle between the bulls and the bears, and the bulls definitely have the upper hand right now. We're practically back at the highs of the day. Pull up the intraday charts on Axis Bank and IndusInd Bank. Some of these stocks are making very, very strong moves on the upside as we get into the final expiry spell as well, the last 25 odd minutes. Look at that shoot up on Axis Bank and a similar spike coming through on an IndusInd Bank as well for the time being. Then you have L&T that's moving higher. So quite a few stocks that are now getting added to the mix on the upside. Vinay, just expand on your thoughts on the financial space. I mean, you did mention that you want to be with top-notch franchise. How should one cut it up? Because we're probably at the peak end of the rate cycle, so there's some concern about margin compression. But then you have, banks also getting the deposit tailwind now with the tax changes on mutual funds. So again, would you look at private sector, PSU? Would you look beyond banks to other parts of BFSI as well?
So we've got a problem of plenty in banks. Lots of banks are very high quality and lots of them have got derated as well. If you look at the biggest bank in the country, HDFC Bank, courtesy the merger with HDFC Limited, it'll get an angle of actually probably NIMs improving in the shorter term once HDFC Limited's inputs kick in for HDFC Bank and then probably stabilize at current levels. The stock is trading at about 2.7 times 1 year forward price to book. Its average has been 3.8. We've seen robust earnings growth there, both the top line and bottom line of 18 to 20%. So that's one of our favorites. Moving on, you mentioned Axis and IndusInd. We like them as well. Both of them have got growth on the top line between 15 and 22% as far as the loan book growth is concerned, and bottom line growth coming in line. All of these companies have capital adequacy ratios also being very positive. Moving to the PSU banks, we like SBI and Bank of Baroda, both with a valuation angle and them being very clean as far as their banking franchise and where they are on the digitization part. So I think you've got a problem of plenty as far as banks are concerned.
Hi Vinay. Good afternoon, Vinay. Normally I think you're sitting on some cash levels. So can you quantify that and how does it compare with normal averages in terms of cash positioning? And also I'm looking at stocks that have corrected close to 30% from the top. One of the stocks that came on my list is Concord from the logistics space. You like that theme?
So, on your first question, we were earlier at about 10% cash. We've deployed a bit. Now we are at about 8% cash. We think, it's time that you have to start deploying a little bit more cash in the next by the next quarter, so that by the second half we are fully deployed. So that's our cash position. Remember, the market today is at about 18 times 1 year forward, and when you go 1 year from today, you're probably at 15 to 16 times for 2025 numbers. So the market will start looking attractive once the rates start getting cut, and we're probably 4 to 5 months away from that. So we're well geared up for that. On Container Corp, we like Container Corp. It has some problems in the short term. Having said that, why do we like it? Because it is a cash cow. It is a play on the railroads coming in the country, and as imports and exports improve, when the world gets to normalcy, Container Corp has a lot to gain. The short-term pain which Container Corp is really having is when does it get divested? We already know what's happening to the Adani issue, which is partly getting sold. But once the government moves with the divestment part of the angle, this stock has gone from a 40 plus time 1 year forward multiple to a 20-25 time 1 year forward multiple. Earnings are 10 to 12%. It has net cash, and it's a big play on logistics or capex of the country. So I would say 6 months from today, this stock should start doing much better. But yes, in the short term, it has had some pain, and I think a lot of the pain is behind it.
All right, Vinay, thanks very much for that. We'll take a very quick commercial break. Stay with us. We are up 118 points and things are looking pretty solid. 17,066 is where we are at.